watch these two levels. Now, what would you use the trading vehicle for these two levels? Hey everybody, another wild day. So we have a lot to go over. We're going to go over the indexes, stay to the end, but let's go through this first, BRCC. So we're all familiar with the name Black Rifle, and they came out here and they just had a great day. Then we had a little bit of a rug pull, but we held the 2280 level. What's important about holding this level is it shows right where support is. Now you have a double inside day, and then based upon that inside day, you have another inside day right here, right? So not only do you have two inside this, you have this inside this. What this does is coil like a spring. That's why when you see people say double inside day, that's why it's a big deal. Think of a spring when you see something like this. Now, 2667, if you can get over that tomorrow, you should easily be able to take out that high. If you want a more in-depth view on this, you can take a look at that top 10 video that we did for stocks to watch for the month of April. So obviously in these videos, we just go a little quicker and we're looking for more short-term trades. You are gonna have an issue here. Just be aware of it. When it gets up to here, just make sure it flips. And remember, when you flip upper channels, you can go parabolic. Now, I think it's a little bit important to understand that just where you're at with what the Fed minutes said. So the Fed minutes were not ideal. They were somewhat hawkish, which means that they're going to be aggressive, but they weren't as bad as we thought. It will affect technology, but this is one that we've been shorting in the trading room for some time now. We actually got a little bit of a short off in here, and then there was actually a better time when it just ran right to this when it convinced us that it was going to break out, right? This is what happens in these kinds of markets. They break out, make you think that you're wrong, then they reject and roll again. Why am I bringing this up again? Because I don't think the short is over, and I just want to walk through this. So this was last quarter's earnings that was an abysmal disaster, and it showed very clearly what was going on with the company. Again, this was in the top 10, so you may want to watch that. But what I'm getting at is this. If you focus on this little level right here, and you pay attention to that level, if you break that level, that is a lower low, and we have not broken the 21 day, and we have closed below it. Let's blow this up. We have not closed below that until today, since the breakout. So that's pretty pivotal. You have a little bit of a wick there. We know wicks are price rejection, but if you break that 362.83, you're going to want to consider getting out of this if you're long, and you certainly are going to want to consider shorting it. Just FYI, I already have a short position in this. Make sure you subscribe to the channel and click all notifications, because I am doing private videos, and I think I'm going to start doing shorts too. I've had several requests for those. So also comment on the videos, because your comments are how I'm creating content. So the idea that you're seeing stops, entries, targets, things along those lines, that's because of you telling me what you're interested in. That's the whole purpose of me doing this. So I really appreciate it. 331 is your first level. If you break down like this, which you very well could do again, right? That's 20% down from this level. It'll go through that like butter. But you want to be up and in before earnings. Now you're seeing a divergence. And what type of divergence are you seeing? Well, you're starting to see money pour into dividend yielding and safe names. That's not going to change. So a couple quick things about the Fed. They made it very clear that they're going to raise rates and they're going to be aggressive on the rate front. They said a couple things that lead me to believe that it's not going to be as bad as we think, and we're going to talk about that in a minute. But see how we broke out here and everybody's excited? This is just beginning. If you run through these names, out of all of them, this one looks the strongest. Now, you're going to have to trade this in such a way to understand that, yes, when this happens, it could reject, because these trades super technical, because they're trading from a defensive standpoint. So from this level on the monthly, if you got up to here, and it's going to take a while, it's going to grind, but if you got up to this level, this upper channel, you're going to want to watch that. You're going to want to be really careful of that. But this looks great, and this is a simple flip. Now, if you take a look at the volume, I ran through the entire list of these, but if you run through the volume on these, let's get rid of this RSI, you can see that this was over. So we're hitting all-time highs. Why? Because you're seeing cash flow go into safe havens. You're also seeing us chase yield. So all you're looking is for a simple up and over. 306.56. Now let's take a look at Philip Morris. What's so fascinating about this one? Well, if you look at the whole space, out of all of them, this one looks the best. If we take a look at a monthly, you can see right here where you're at. You can see how you're breaking the 50-month which you have not done since 2019. All this is telling you that you're going to see more buying step in these names. All we're looking to do is flip these levels, flip these two wicks. So just to be safe, what you're going to do is take the higher high of the two wicks. So you're going to say $54. So if you can break 54 tomorrow, you could see this push. Again, we're starting to see a safe haven of investments, I guess is the best way, based upon what the Fed came out and said today. And that's probably something that we should segue into right now. So let's just talk about the 10-year. So the 10-year came out and it hit 2.6%. Well, why did it do that? Well, they came out and said that they really wanted to raise 50 basis points, but they didn't because of what was going on overseas with the turmoil. So they did 25. That probably wasn't prudent and is probably going to come back and bite them. So what we're going to have to look at here is historically, well, if we break 2.6, where does that put us? Well, it puts us right at the 200 month, which we rejected before in 18 on the last, go around. Now, does that mean that we're going to do the same here? I don't know. I don't think so, because here we didn't have CPI that was substantially higher than the 10-year bond. The only time we've ever had a situation like this in 40 years where CPI was higher than the 10-year was 1980. And you literally have to go back to 1980 and take a look at it. And it didn't fare very well when it started to run up. It actually exploded. So you can see something like that happen here. So you're going to have to be really aware of that and how that's going to affect certain sectors. It's going to crush the home builders over the longer term. And we'll talk about some of those trades this week in Saturday's video. But what you want to focus on is understand that it would be nothing for this to go to 2 3/4. Be nothing for this to go to 3. As that continues, money will flow out of equities if this moves too fast, and it will flow into the Philip Morris and Eli Lillys of the world. You would expect to see energy continue, but I just want to go through this. Focus on the fact that you are just riding that line right here. You are riding the 21 and you're butting against this. And with all the information that came out today with crude oil futures, this really did not get the oomph that we were expecting. So it's possible that we're going to see a little bit of rotation in this space. And let's just focus on that particular level of the 21-day there. Now, I want to throw this out there. This is the SOX, Semiconductor. And you're going to have to watch this tomorrow. This is a doji. So this is telling you that it's uncertain. And why I'm bringing this up is everyone's under this premise that they can just decide that we're going to take out the lows. You don't know that we're going to take out the lows. You don't know that if we're building a huge base before we go higher. We're under the assumption, because you're reading these things on the internet that say, don't fight the Fed, or this day is day 3 of distribution. Okay, you have day 3 of distribution to you have day 1 of accumulation, and by that time the SOX is up 10%, and you're wondering what happened, and you're buying into it, and then you're getting hammered, and you don't understand what just happened. So what we do is we look for possible pivotal spots, and then we act on those pivotal spots. Doesn't matter if we're right or wrong, as long as we have the right process associated with them, we're in good shape. I have a long-legged doji. I'll take it. So watch these two levels. Now, what would you use the trading vehicle for these two levels? You could use this, SOXL. I'm going to give you a couple different ways to trade this. This would be the bear fund if you want to trade this, which is over the 50, which has not happened for some time. If you flip this level tomorrow, let's call it 47.05, you're probably going to push up to that 54 area very, very quickly. There's nothing here. There's no reason for that not to happen. And then if you were just looking to make investments in real companies and not just ETFs, watch this. Because NVIDIA held, caveat, I started a very small position on the long side here today, already into the close. I'm actually down in it right now. But see that? That's where I'll get out. I'll just blow it. I'll blow the whole thing out. But if I can hold here and base for a couple days before going higher and filling this gap, that would be great. If you look at what the Qs did, we came to the 21 and the 50. Okay, this is basing. This is standard basing material, right? 3 down days, everyone goes accumulation, then you make money, and then everyone says, oh, we have an accumulation day, right? You see where I'm going with this. So we just don't know. Nothing's changed. Yes, they've gone down, they've gone up. But what has really changed? In here, I brought this point up earlier. I said this could possibly be, well, we talked about this in the live call. I said this could possibly be let's get rid of this for a moment, and let's just clone this one. We like to clone them so they have the same trajectory. If they have the same trajectory, it gives you a better understanding of where you're at, and look at that and how that fits. So we needed this close to see where it was. Now you can see how that lies perfectly. I was saying earlier that this is a cup. This could be a handle. This could be a springboard. So don't get twisted in these words and acronyms that you're reading in the news feeds and the media. I can't stress it enough. Just focus on what's in front of you. And right now you have a long-legged doji sitting at the bottom of a falling wedge line that could be a cup and a handle on the SPY. Does it look pretty? No, it looks hideous. We're below the 200-day. You're sitting on the 21. There's nothing decided here, but that doesn't mean that it doesn't work. So understand you're at a point of indecision. Now let's see what happens and how we can profit from it. That's it. That's all I have. Everyone have a great evening. Trade to win tomorrow.